Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Good morning, everyone. Today's Wednesday, October the 15th, and this is the Moneyball Morning Report. My name is Anne-Marie Band. We're starting with the E-mini S&Ps, taking a look at that 4-hour formation and realizing that we are approaching the 0 DTE call wall today, 6,740, right? Now we danced around 6,720 for essentially 2 days, right? Give or take a couple of points. And now we've breached that area. We had some pretty good volume yesterday. We are now in this noisy 4-hour candlestick that came last week with the news of the tariff event. So let's think about what we've got on the docket. Yesterday, the buyers had a lot to do to defend their levels. So what did we notice? Put wall, 6,600. We came in, broke it pre-market, and began to rise to the upside. Then we held 66.32. That was the zone. I said, hey, listen, once it recovers, we'll be looking at buying pressure. That should send us all the way up into 67.17, at which point we should have a fade. My support ledge was 66.84, and that's where I took the trade-off. It did go all the way into the VWAP at 66.75, but I really don't care about leaving money on the table like that. It was a well-executed trade right at resistance into what I suspected was solid support. Pre-market opened up just like that in that very key zone on that 4-hour formation. That's the line we're going to look at as new support. 66.83, 66.84. Where are the traders headed? 67.40. No doubt about it. They're above the 50% line of the Fibonacci that goes through that great big zone. And past that, we've got value area high 67.66. So you might say, well, why are we moving like this? And there really is no why. Right now, traders have been trained to buy the dip in this type of environment. And so when we have very bearish days like this, people sometimes forget, hey, we're in a buy the dip structure. Now, my suspicion is that we have a shift in the broad market. Now, today is probably the day I'm either going to be proven out as wrong or potentially correct. But I don't really care about being right or wrong. What I want to do is make money. And so the goal would be the first past resistance into 67.40. That's the call wall. The next gamma line is 67.50. That's also old support. So the first thing the traders are going to try and do is sell off of that 67.50. That's going to be that area that's the do or die. If buyers come in and penetrate that, we'll move up into value area high, which is rounded about 67.70. There's also a gamma line up there at 67.75, and the big call wall is still at 6,800. Okay, notice, big picture event, the put wall remains at 6,400 for weekly and monthlies. The call wall remains 6,800. And so what's happening is the 0 DTEs are moving around. Remember, for the folks that have these 0 DTEs, they want it to be below 6,740 and above 6,600. right? So they've got about 60 points of slosh where they can make money. Watch those edges for the bounce up and the reflexive fade that pulls us out of this area of heavy congestion, right? Inventory accumulation for 1, 2, 3, 4, 5, 6, 7 days before the break, and then a rotation down. Now we are very likely to retest that 67, 70-ish area, right? So there we are up at the call wall. If you are long, friends, I'd say take some profit. A good place. Okay. Let's get to the NQ. Taking a look at the NQ on the 4-hour chart, 0 DTE call wall, 25,000. Traders are up over it. Remember, what the tendency to do is, oh wow, also the big fat call wall for the weekly and monthly. These guys trading the NQs are on the back foot. There's a lot of structure that folks are not getting right. I listened to a guy yesterday. Oh my gosh, he made me burst out laughing. He was talking about selling options and trading in the markets, and he says, you know, never have I met a day trader that didn't just feel compelled to burn a pile of money. And so I just thought that was hilarious. But anyways, so here we are at the call wall, 25,000. Now notice the spikes above this round 25,000 number, high about 50 points higher. So easily we could stretch up into this value area high before rejecting. Where is the accumulation of inventory above 25,000? It sits here all the way up to 25,380 or so, right? What do I suspect? Well, trend is flat, mixed, momentum is slightly bullish. Candlesticks have been retracing each other quite a bit. We have higher lows, and so that tells us that there is buying pressure below us, so it still is a buy the dip structure. And so I suspect this news where, hey, listen, military's been paid, we diverted money, kicks the can down the road a little bit, and, you know, everybody's saying, well, you diverted to pay the military, but, you know, air traffic controllers are still not getting paid. Well, the administration cares more about the military than air traffic controllers, and that's their thing. Okay, so everybody's got some bone to pick. It's never enough. But as I jump off of my soapbox, wouldn't it be nice if the government remembered that they actually work for us? Okay, moving on. So here we have upper edges, 25,080, 25,100. Look at the higher lows being bought. We are well up over the 4-hour formation. Support, interestingly enough, remains the same line we were watching yesterday, 24,744. If we're above there, price action is in continuation. For yesterday's pre-market chatter, value area low was the support zone. Remember, when support zones or gamma levels break, you have to wait for them to resolve. And so they either will break in a continuation in the direction of the break, or they will break and have a reflexive motion like the rubber band in a buy the dip scenario, and that is where we sit. We sit in a buy the dip scenario. So let's embrace that, shall we? Better thing to do. Okay, so we've got that, and dips or buys. I don't know that I'm going to trade the NQ today. It's very noisy. I will be on Top Step TV. Lunchbox trading, maybe? No, maybe it's group coaching. I can't remember. One or the other, but I definitely will not be trading these guys. It looks too messy. Now, if per happenstance we get a savage move to the upside, 25,250, I am going to take a short. If we have a savage move to the downside and we break the low of the opening range and fail the retest. So what I want to do is I want to see that opening range area break, just like this. Here is the bounce and then a failure. These two candlesticks here represent what I'll be looking for in this formation down here at 24,744. Then it's got potentially 200 points of motion. Okay? Notice we still, after 3 days, we still sit inside of Friday's candlestick. This tells me we've got sideways formations on the horizon. So we got to be careful. Let's take a look at gold. Goldman said something like, this seems like structural. The move up in gold seems structural versus speculative. I don't know if that's just a fancy pants way of saying, hey, listen, we've got additional upside pressure, right? So take a look. Inventory accumulation. Here we are breaking out of the structure and then building a new region of inventory accumulation. Now, as I mentioned, Martin Armstrong has this number at about 4266 to 4246 as a region to watch. The Fibonacci shows 4265, but we will put Socrates on notice and see if we've got ourselves a real move that is going to break down there. But he is seeing a topping formation here. That being said, he's got a potential blow-off top event all the way up here at 4,500. So what does today's motion in gold tell us? Well, we've got inventory accumulating certainly between, let's look at this low, 4,170, 4,180, and topping out at about 4,230. So it's about $50. That's a lot of motion, right? Lots of motion here. The angle is $55 wide. My suspicion is they try to hold this wick at 4,190. And if they hold that wick at 4,190, we will accumulate into the next piece of news. Listen, we have all kinds of things going on in currency markets right now. We've got to be super careful. Currency markets are where things sort of go sideways. So we want to be, if we're holding gold, not a bad idea to, I don't know, maybe sell a call or two somewhere way up out of the zone. Could be a rotation. All right. That being said, it is still bullish, still buying the dip. I have tried, and I've made money. I haven't lost money. I have shorted these tops, but increasingly my return has gotten smaller and smaller. Today, I'm probably going to do the same thing, right? Although I may buy a dip if we come all the way back into the original breakaway zone and that gamma line at 4,160. Okay? Dips or buys, no doubt about it. Massive momentum. I mean, massive momentum to the upside. Just really running at quite a clip. Let's take a look at silver. Silver not doing quite the same. Take a look. I did not even realize that this 52 level, I thought literally 50 was going to be the top of the range here. Just bananas, right? Absolute bananas. But I got to tell you, patience really pays off in the market. And, I remember silver being just in the toilet so many years ago and saying, this thing's going to have an updraft. Of course, it took 25 years to do it. So there you have it. But here we are staring down this 4-hour formation, $52 on the upside, $49.60 or so on the downside. So we've got ourselves a wide range, primarily buyers underneath, but these wicks above tell us that sellers they're there. They are looking to move price action down. That being said, we've got a very big opening 4-hour candlestick right at $50.37. We are above the gamma wall. So what does that tell us? Traders want to fade it in there. Don't know if they'll have the power to do that. Look at where the call wall for the weekly and the monthly is. We know that's 50. The 0 DTE is up here at 51, right? So very, very expansive move to the north. That should exhaust, but we shall see, right? We had a very bearish candle that broke the rotation, and now we've got all of this noise and uncertainty. Dips clearly still buy zones. I like the opening candlestick tick at about $50.31. It's the anchored VWAP close for the motion, and that is a far way away. If you want to trade now, you better be looking at things from a very tight angle, and you better be in and out. That's the best that I can tell you. All right, here we have SPY. Big rotation. Dips or buys, obviously. Big wicks at the top end telling us that spikes are also sells. First line in the sand is the gamma line of 668. $668. Traders trying to get off the top of that. VWAP is right here at 667 or so. It is in a dip buying structure. We bounced at the opening range off of the 665 call wall. VWAP about 663. Put support for the 0 DTE 660, and then 650 remains the put wall well below. These things are not lifting. The call wall also a call wall being breached here on the 0 DTE, but the call wall above for positive price action is still up here at 675. Very, very interesting formations. Pullbacks, clearly buy zones. Where's the line in the sand? If we cannot, what the traders want to do is get below 665 so they can make their money selling the calls. So far, they're underwater. We know what happens if they're underwater and stay there. They have to buy the instrument up. And so the gamma lines in this contest are somewhere between 668 and 670. That's what we'll be watching. Overall, dips or buys in a very, very noisy and congested market. What do you do in areas like this? Watch for the edges and then plan your attack. Okay? So for me, topping formations will give me my first pass short. If I can't break down, I'm getting out of the trade and just taking my pennies and leaving. Other than that, I'll wait for the deep dips to buy, but I am not trading in this garbage in the middle. Too much noise and too much risk. All right, everyone, take care, and I'll see you on the streams.